Welcome back to Dollar Chronicles. Hit that like button and make sure you're subscribed right now because today's explainer is going to completely change how you view the global economy. We're diving deep into a source that reveals an invisible machine operating right beneath our feet. It's a totally secret system that prevents global economic collapse every single night while the rest of the world is fast asleep.
Just imagine it. The heavy doors of a massive Wall Street bank lock up at 5 p.m. The traders go home, the lights dim, but behind the scenes, a silent panic is just beginning. What exactly keeps these massive trillion-dollar institutions from going completely bankrupt before the sun even comes up? Well, the answer isn't a government bailout. It's actually something far more mysterious. We're talking about an invisible shadow market that moves billions of dollars in the dark.
To truly understand this, we have to look at what experts casually call the plumbing of the financial system. Much like the actual pipes hidden behind the drywall in your house, this system operates entirely in the background. It's completely inconspicuous, quietly ensuring that massive amounts of money are exactly where they need to be, exactly when they need to be there. But if these pipes ever burst, the entire global financial structure would just instantly freeze.
Part 1. The system's hidden plumbing.
To grasp the sheer scale of this hidden plumbing, we first need to understand the massive, high-stakes problem that commercial banks face every single day at closing time. You see, banks don't just put your money in a vault and leave it sitting there. They lend it out, they move it, they invest it. But when the day ends, they face a brutal mathematical reality. By law, commercial banks are obligated to hold a certain amount of highly liquid cash at all times to meet really strict regulatory requirements. It's basically a safety net. But here is the catch. Banks absolutely hate holding cash. Why? Because sitting cash earns zero returns. Every single dollar sitting idle in an account is a missed opportunity to make a profit, so they want to invest absolutely everything. And this creates a terrifying nightly tightrope walk. So what happens when a massive financial institution has invested so aggressively during the day that they suddenly find themselves short on liquid funds to meet those strict legal requirements? Think about it. What would you have done if you were a bank executive facing massive regulatory fines by morning? You can't just print the money. You have to find it, and you have to find it fast.
Part 2. Decoding the repo market. The solution to this nightly crisis is honestly one of the most brilliant inventions in financial history. It's a hidden arena where financial titans trade massive sums in the blink of an eye just to survive until morning. Welcome to the invisible world of the repo market. Now, repo is short for repurchase agreement. You can think of it like an exclusive, incredibly high-stakes overnight pawn shop for the world's financial giants. It is a short-term, secured financing transaction where one party sells securities to another, but they do it with a legally binding commitment to buy those exact same securities back at a slightly higher price later on. Let's break down the anatomy of how this trade actually works in the real world. Step 1. Party A, that's the bank that desperately needs cash, sells their securities to Party B. Step 2. Those securities transfer ownership and act as collateral for the cash they just received. Step 3, Party A buys them back later at a pre-agreed higher price. Now, that tiny price difference, that is actually the implicit interest rate of the loan. It is a perfectly engineered system of risk and reward.
What is truly breathtaking here is the time horizon. When we say short-term, we aren't talking about a 30-year mortgage or even a 1-year corporate loan. No, the most common transactions in this shadow market are overnight repos. The securities are sold in the evening and they are bought back the very next morning. The sheer, staggering speed at which this hidden machine operates is honestly hard to comprehend.
Part 3. Lenders, borrowers, and collateral.
Now, for every desperate borrower needing overnight cash, there's a lender flush with cash looking for a safe, highly efficient way to earn a quick profit before the sun comes up. Sounds like a perfect match, right? But wait. What if the unthinkable actually happens? What if Party A, the bank that borrowed the cash, becomes completely insolvent during the night? What if a global crisis hits, they go bust, and they simply cannot buy those securities back the next morning? Doesn't that mean the lender just lost billions of dollars? Wouldn't that trigger a massive domino effect, collapsing the entire global system?
Here is how the system cleverly protects itself. In a repo, legal ownership of the collateral actually transfers to the buyer. So if the borrower defaults, the lender has the absolute legal right to instantly liquidate those securities. And this is exactly why volatile stocks aren't allowed here. Lenders demand highly stable collateral, primarily rock-solid government bonds. So if the borrower dies in the night, the lender simply wakes up and sells the government bonds in the morning,
disaster totally averted.
This brilliantly illustrates the different strategies these financial titans use to balance their ecosystem. A repo is a trade viewed from the perspective of the guy desperately needing cash. A reverse repo is the exact same trade, it's just viewed from the perspective of the cash lender making a secured investment. And then you have securities lending, which is when a party doesn't actually need cash, but specifically needs to borrow a certain asset, like a very specific bond, often backing it with cash. It's this incredibly complex, perfectly balanced web.
Part 4, the central bank twist.
But here is where our story takes a massive, unexpected turn. Up until now, we've only talked about commercial banks using this system just to survive the night. But what if I told you that commercial banks aren't actually the ultimate masters of this domain? The shocking truth is that central banks, the giant institutions that literally govern the world's money, use this exact same hidden plumbing as their primary weapon. They don't use repos to survive. They use them to, quote, actively enforce its monetary policy. This shadow market isn't just a pawn shop. It is literally the master control panel for the entire global economy.
This translates into ultimate economic power. Think about it. If a central bank wants to stimulate the economy, they go in and buy massive amounts of securities in the repo market, which instantly injects billions in cash liquidity into the system. The money supply expands, but if they want to cool down inflation, they do the exact opposite. They sell securities, sucking cash right out of the system. They are literally shrinking or expanding the actual money supply with these incredibly simple overnight trades.
Part 5. Inside the Swiss engine. To really comprehend the massive scale of this, let's look at a real-world engine, the Swiss Financial Center. Switzerland operates a highly advanced repo trading platform called CORE. It's managed by SIX, who acts as a completely neutral, independent intermediary. It's essentially the secure, high-tech arena where all these financial gladiators meet. On this single Swiss platform, over 160 massive financial institutions are secretly trading in the dark. We're talking about commercial banks, huge insurance companies, and the Swiss National Bank itself, all plugged into this one singular pulsing network of collateral and cash.
And they aren't just trading local money either. This single independent intermediary processes trades across 14 different global currencies. It is a stunning testament to how globally interconnected this invisible plumbing really is. A financial shockwave in one currency here can ripple out across the entire planet before dawn.
Part 6. The rate that controls everything. Now you might be wondering, why does this matter to you if you aren't a massive commercial bank or a central bank? Well, because the biggest reveal of this entire explainer is right here. Remember that tiny price difference between selling the security and buying it back in the morning? That difference is called the repo rate. And because this market is the absolute baseline of the financial system, this tiny interest rate calculated in the shadows ultimately dictates the baseline cost of money for everyone. As the repo rate goes up, the cost of borrowing for every bank goes up. And trust me, banks do not keep those costs to themselves. In Switzerland, for example, they take an average of 110 of these individual repo rates from that core platform every single day to calculate something called the Saron reference rate. It's computed and published every 10 minutes. It is the absolute heartbeat of their entire economy, and it is derived purely from the desperate overnight survival trades of these financial giants. And here is the kicker. That heartbeat connects directly to your wallet. That repo rate, calculated while you sleep, determines the interest rate you are charged on your personal loans. It dictates the returns you get on your savings deposits. It decides exactly how much you will pay every single month for the mortgage on your house. The hidden machine literally controls it all. Which leaves us with a truly terrifying reality to ponder. The plumbing of the financial system works flawlessly, right up until the moment it doesn't. If trust suddenly evaporated, and this overnight shadow market simply stopped working tomorrow, what do you think would actually happen to your money? Tell us your opinion in the comments below. I really want to know what you think. And hey, if you thought this explainer was incredible, wait until you see the next one. Click the next explainer on your screen right now and make sure you like and subscribe to Chronicles.